All right, and we are live for another streaming episode of Alternative Money Mondays. Hello, everybody. Thanks for joining us. Great to be here. Great to see our normal co-hosts back in full swing here. So my name's Jeremy, of course, the co-founder of Ledgerama, makers of Walla Wallet, the original, the safest, the trusted wallet in the HBAR community. I'm joined by our community manager, Tim Mungai, and of course, my favorite influencer in the Hedera ecosystem, Brandon the HBAR Bull. Thanks for being back. I know you've been busy over the past few weeks and month or so, but always a pleasure to have you back. And today, of course, we're just going to dive right into the drama. I'm sure people have at least heard a little bit of about what's going on in the crypto space, but we're going to do that. We're going to talk about what impact that's had on the markets, and then, of course, we'll talk a little bit of stuff about internal stuff with Ledgerama and what's going on with Walla Wallet. But for the most part, we're going to be talking about the FTX, Alameda, Binance debacle. So Binance is really only kind of involved in a, kind of as an aside. I mean, of course, they were a big part of the picture, but, the centerpiece of all the drama is around the FTX exchange, Alameda, Sam Bankman-Fried, and all those goodies. So just to kick it off a little bit, of course, and please, users, stick around because, at some point in the show, I'm going to give out a magic number. And then when you're going to take that magic number, I might ask a question too. You're going to send an email to info@wallawallet.com, and that's how we're going to select our $25 HBAR winner. And as usual, we're going to give away our 10,000 jam tokens to our Twitter family at the end of the live stream. But stick around if you want to catch that $25 in HBAR, because we're going to give it up. We're going to give the magic number and secret question here at some point in the show. So you never know when that's going to happen. So stick around. Any rate, so for those of you that may not have any clue what's going on in the crypto space as far as this drama going on, FTX, what is FTX? Okay, of course, FTX is an exchange. It was the second largest exchange in the world, centralized exchange, was the second largest centralized exchange behind Binance, and then. So FTX is huge. I mean, was it last year during the World Series? For those that are for our American friends or folks that like to watch American baseball, during the World Series last year, FTX. I saw FTX being advertised. I was like, wow. Of course, in the Super Bowl, there was some advertising as well. And I mean, you have to imagine advertising during the World Series of Baseball or the Super Bowl in the United States. I mean, the price tag on those kind of advertising is like would absolutely make your head explode. Millions upon millions, hundreds of millions of dollars spent on 30-second advertising slots during those events. So to see FTX being advertised in those, of course, was huge. They're a huge exchange, and they were making money hand over fist, but they made some mistakes. So FTX, cryptocurrency exchange. Alameda is involved to no small degree, and Alameda is certainly less known, right? So Alameda is so both Alameda and FTX were founded by Sam Bankman-Fried, who was the CEO and just kind of the golden boy of cryptocurrency, particularly in the United States. Sam Bankman-Fried had been testifying before Congress about a number of things. There were a lot of senators in the U.S., a lot of leaders, a lot of regulatory folks, from the SEC and from the CFTC, the Commodities and Futures Trading Commission, that were looking to guys like Sam Bankman-Fried for answers, for help with regulation. How do we proceed? We don't want to stifle innovation in the United States, but at the same time, they have a vested interest in protecting investors and protecting businesses, taxpayers, all those kinds of things. So Sam Bankman-Fried was kind of the golden boy, a little bit goofy looking with his big fro and everything, but really kind of spoke to the millennials and to the younger crowd. Just kind of, he showed up. He would show up to interviews with Bill Clinton, in just shorts and a t-shirt. You'd see him up on stage, and you'd have these guys all dressed up, looking pretty dapper, and he'd show up with sneakers and shorts on. Really kind of rocking the millennial kind of aloof look. But at any rate, so Sam Bankman-Fried, yep, and so FTX is cryptocurrency exchange, and Alameda Research was the company that he founded that was a trading venue. So So what happened was Alameda got into some trouble. And by the way, feel free to jump in here at any time, Brandon. You know that, or Tim, either of you. So Alameda Research was founded, as I mentioned, founded by Sam Bankman-Fried, and they had been in trouble from what I could dig up. They had been in trouble really since June of 2022 when a crypto hedge fund called Three Arrows Capital collapsed. So there was a hedge fund that collapsed, and then this caused a lot of basically like calls. There was a lot of loans. There was a lot of trades being pulled. There was a lot of action. There was basically Alameda started to get into some trouble when the prices started to tank. These risky assets started to lose steam, and basically it's like a house of cards, right? And anytime, and this is generally true in macroeconomics, you can't just look at you can't look at events as necessarily isolated events, especially something big happens like Evergrande happened with real estate in China. These big issues have kind of a domino effect on many other industries. Something that's real estate based has an effect on insurance companies and banking, and construction, whether it's mining silicone for sand to make the concrete. It's all kind of interconnected in this global marketplace that we have going on in the world. So something like big crypto hedge funds collapsing can have an effect, and then suddenly Alameda got in trouble, and Alameda needed money. Well, what happened was the crypto exchange FTX lent billions of dollars of customer assets to fund risky bets by its affiliated trading firm, the Alameda Research Group. And that kind of set the stage for the implosion. So billions of dollars lent of customer money, right? So basically taking your hard-earned hodling cryptocurrency money that was sitting what you thought was safely on FTX was being loaned to the tunes of about $10 billion was loaned to is what Alameda Research owes FTX. So to the tune of 10 billion. Not a small number. I know when we talk about global economies and governments, 10 billion kind of sounds like, but that's a lot of money. 10 billion is so much money. It is crazy. I could talk a little bit about some of the comparisons of what 1 billion would buy, but we won't go into that. Suffice to say, 10 billion is a lot of money. So as of Friday, so FTX loaned a bunch of money to Alameda, which was in trouble, and then something happened. They were expecting Binance to buy. There was some kind of drama going on. They were expecting to be acquired by Binance, and so that didn't happen. That fell through. There's issues with the FTT token. I've been talking too much, Brandon. What's your take on this?
Sure. So if it was just Alameda, which was essentially a hedge fund, they also ran as a market maker, and they were doing plenty of shady stuff, right? They were using FTT as collateral for loans. Now that's up to the lender and the borrower, right? So no issue with that.
So what's FTT for the users real quick?
FTT was the token that was used on FTX for all kinds of stuff. So mainly to reduce fees, right? Kind of like the BNB token on Binance. Now BNB has a layer 1 as well, network associated with it. So it's not exactly comparable, but you can think of it as like a loyalty token or something like that. But they just created this thing. But I have no issue with a loyalty token out there that's used to do things like lower fees or used for services of whatever kind. No issue with that. No issue with a borrower or lender agreeing to use it as collateral, but they made some bad bets. But there's nothing wrong with Alameda failing as a hedge fund. The issue is when you kept on saying lending funds from FTX to Alameda. They stole people's money. It was in the custody of FTX, and they stole people's money and used that to try to fill the holes and get Alameda back on track. That's where the issue happened, right? It's not necessarily another hedge fund in crypto blowing up, regardless if it's Sam Bankman-Fried's hedge fund or not. That happens. Who cares? Let it go. Let it fail. Now, granted, that can have contagion effects for other things, but to go then and take funds from unsuspecting depositors on FTX. That's unacceptable. That's fraud. Of course, I don't want to go too far. We'll let the courts figure a lot of that out. But if that is in fact what happened, which is what it looks like at this point, it's fraud.
Right.
It's criminal.
Because what you're doing then is you're taking unsuspecting users of FTX and turning them into creditors without them knowing it.
Yes.
Right. So you're essentially you're turning them into creditors without any foreknowledge or any agreement, or there was no box that checked yes, I agree to let FTX give my money to Alameda to fill the gaps of their risky bets.
Exactly. And Celsius is one thing, right? You're lending your crypto and trying to get a return. I lost a few $1,000s on that. We'll see where that ends up. But that's one thing. You understand that you're lending your crypto, right? That's part of their terms and conditions. What they did here, if what we suspect is true, and they were just taking funds and using it to backfill Alameda, that was not part of their terms and conditions, right? Those customer funds were meant to be just stored, right? They are other people's property. You can't take them. It was explicitly against their terms and conditions.
Right. Yeah. Problematic.
Another thing I'm seeing floating around is, well, what is happening right now is it's calling for regulation in the crypto industry. But now someone might argue the regulators, the people we're supposed to trust to bring sense in these markets is you'll find they're receiving money from the same
from Sam Bankman-Fried, right?
Yeah, they're receiving huge donations, millions to the tune of millions of dollars to as a donation to their to advance their political stuff. And
right
now, where should we? How are we protected? Even if regulation comes, will it favor the users themselves, or are they going to still to make this sort of regulation to favor them?
Well, we've been begging for this for a long time. Common sense regulation, right? And he was donating money to mostly Democratic political campaigns. Now that is one part of it, but the regulators should be somewhat separate from that. Granted that they're going to get pressure from legislators as well, but I think that's something that we really have to take seriously as a Hedera community, is reach out to your legislators, reach out to your representatives and try to inform them, because crypto is going to get wrapped up in this thing, and all crypto is bad, right? There's going to be a stigma. Anything that is tied to crypto, whether it's NFTs or supply chain tracking or what, all the great stuff that's happening in our space, that's going to be wrapped up in crypto bad, right? And that's going to happen for a while. So we need to, as a community, communicate that. And you think that when you contact your representatives, you're not going to have an impact. That's not true, because hardly anybody contacts their representatives. So they know if there's one person that contacts them, there's probably thousands more who have a similar, a similar feeling, a similar viewpoint. So it is important for us to get involved and explain that all of the great things that are happening within Hedera, whether it's banking the unbanked, whether it's supply chain tracking, whether it's all the great things that are happening in ESG and the environmental use cases, whether it's, being 90 times more efficient than Visa. I mean, just that in itself is a tremendous benefit. So it's not just about these bad actors that did nefarious things. There are beneficial good things that are happening, and I'd like to kind of come up with a boilerplate letter to send these guys, but I mean you do what you think is best. I mean, you can just explain all those positive things that are happening within our space, and don't throw out the baby with the bathwater. Because it's going to be difficult going forward, but as long as they're properly educated that there's all kinds of great things going on in this space, I think they will listen to it, because they do also understand that it's not good to stand in the way of innovation. And this is, an innovation that is on par with, in my opinion, the internet. Certainly none of this, of course, we want to make this clear, even though we haven't been talking about the market yet, none of this is financial advice. But, I do think that the potential for this space and the benefits it can be brought to society in general is on par with the internet. What the internet did for communication, this can do with value, and not just money, but value across the board, in the financial space.
Right.
Exactly. And I completely agree with you, Brandon. And we'd love to leave, if you do have those resources or such channels of communication, so that we can help broadcast what is going on in the Hedera ecosystem. Like something I would like to point out, Jeremy, is I was watching up some video, some interview with Nabil Manji from FIS, and he was talking about proof of reserves, where it's a use case that they are going to they are working on to provide a proof that when transactions are made via stablecoins, some data is captured, some proof is captured regarding that you can receive a stablecoin that's backed one-to-one with your local currency, whether you're in Kenya, US, Europe, whatever. And that means you cannot you cannot do any shady stuff. They cannot inflate any amount of tokens which is backed by nothing. And such use cases should be brought to light, and it's really amazing.
Yeah, absolutely. Yeah, similar. Yeah, same kind of thing that we saw happen with Luna, right? Where where you got these algorithmic stable coins that really aren't stable coins at all, and those can cause definitely systemic risk within the cryptocurrency space. Yeah, you've seen some of the, unfortunately, one thing that we're always, we kind of expect is that, the old saying that never let a good crisis go to waste. I've seen that thrown around in multiple interviews by other regulators and politicians that, that they see this and they just got there. Oh boy, we just can't wait to regulate and tax the heck out of it and all those things. So, we hope that there is a rational, measured approach to this. And Brandon, I'd certainly be would be happy to collaborate with you on some kind of boilerplate that we could send out. That people could just kind of fill in the blanks and, put it, fill in the blank of your local representative's address and send it off. I would be happy to, happy to engage in something like that. Because yeah, we certainly, we know that regulation is, can be a good thing, right? It can be a stabilizing factor. It can be good for everybody. There's a reason that the United States has the most robust capital markets in the world, and a lot of that stems from sound regulation. Of course, the government's going to, they're going to want to tax it and get their hands on a part of it, but we just want rational, reasonable approaches to the legislation. So currently, where does this bring? What is the current status of FTX, and where are they now? Well, as of Friday, so this was kind of all bubbling over the past week and a half, but as of Friday, November 11th, FTX has officially filed for Chapter 11 bankruptcy, and Sam Bankman-Fried has resigned as the CEO of both Alameda and from my understanding is definitely has resigned from FTX. I believe he also resigned from Alameda Research. So what does Chapter 11 bankruptcy mean? Well, it's also so Chapter 11 doesn't necessarily Chapter 11 bankruptcy protection doesn't necessarily mean that the exchange is going belly up, like they're not necessarily shutting the doors. So in the United States, Chapter 11 means that the company can continue to operate. They just have limitations, and they basically it's a process by which companies in the United States restructure their debts. So the Chapter 11 bankruptcy doesn't mean that FTX is going under, doesn't mean that they're going to just shut off the website, but it does mean that they are going to that what they do going forward is going to be regulated more strictly and enforced by the U.S. courts. So basically now, because of the Chapter 11 bankruptcy protection, if they want to restructure a debt, right, they have to get approval from the courts, and the courts have to say, yeah, okay, we allow you to do this. Things that they can't do, they cannot engage new loans, and they cannot engage additional debts, right? So in the meantime, unless there's, I imagine there's probably exceptions to all this stuff, but basically it means that they're not allowed to engage in new financing. and everything is going to be kind of watched with a looked at with a under the microscope by the U.S. courts. So in Chapter 11, the individual or business filing bankruptcy has a chance to propose a reorganization plan. So FTX can propose a reorganization plan, and that can include things like downsizing business operations to reduce expenses, things like laying people off, and negotiating debts. And in some cases, the plans can involve liquidating all the assets to repay creditors. From what I read, there was something like 130 different companies that are all tied to FTX and Alameda Research. So like you mentioned, that contagion effect is out there. And if the chosen path that FTX chooses as under this Chapter 11 protection, if the path is feasible and fair, then the courts accept it, then the process moves forward. And just to kind of give an example of some other companies that have filed Chapter 11 bankruptcy within the U.S., General Motors filed Chapter 11 bankruptcy. Kmart, if you're not from the U.S., Kmart's a huge retailer in the United States. Toys R Us, the biggest toy retailer in the world, also filed Chapter 11 back in February of 2017. My daughter was very sad to see Toys R Us in our local area close, and it became like a Bloomingdale's coat factory or something like that. But at any rate, so thousands of companies have filed Chapter 11 bankruptcy, and they have continued on to be successful operating companies. Yeah. Okay. All right. So jump in there, Brandon. What you got?
Sure. Well, there's two things. Or a few things that I want to mention. Number one, it was weird that FTX, which is a Bahamian company, technically offshore, filed Chapter 11 in the United States. That's a bit strange.
That is weird. I didn't really think about that.
Yeah,
their operations are based out of the Bahamas.
Mm-hmm.
So maybe it's just FTX US.
I don't think so. I'm not sure, but I don't know all the ins and outs of that, but right. I did find that strange. The other thing that I wanted to mention is a lot of times, they become, a solvency crisis becomes a liquidity crisis, right? And you just have to wait and make sure everything calms down so you can take those assets, mark them to market, and then you can make your creditors whole. In this instance, we're not going to see that. The reason is because there's a $10 billion hole, at least. That's just FTX. And then there's the other things like BlockFi and some of these other entities, Voyager and some of these other entities. There could be a bigger hole. But even just the hole for FTX is $10 billion. They had less than $1 billion worth of assets. And those assets are going down in value fairly rapidly. So you can't fill this hole. You can't wait and make sure, the solvency is a liquidity crisis and make sure you get it back on track, mark everything to market. There are some things of value. They have some Robinhood stock and things like that. Again, that's going down in value because people know that they have it on their books and they're going to need to sell it, right? To try to do the best they can. So where in a lot of these bankruptcy proceedings, you might get 50 cents on the dollar, or you might actually be made whole at some point. Here, that's almost impossible. It's more like you're lucky to get 5 or 10 cents on the dollar. Right. But there are some assets there, but it's not going to be like some of these other situations like General Motors and other things that they had an ability to get out of the market. General Motors, when they went bankrupt, they continued on to be a viable business in the future. There is no chance of FTX being a viable business in the future. Or, it is so slim that they could ever be an exchange in the cryptocurrency space that, for all intents and purposes, that's not going to happen. So they can't earn their way out of the hole either. So the bankruptcy is kind of more for show.
Right. Yeah. That's interesting. Yeah. So, certainly, I think you would probably agree that the cryptocurrency space, really people, folks in general, but the news cycles, but cryptocurrency space does have an incredible ability to just have amnesia and just move right along and like, some big drama goes down and then people are willing to move on. But
we can get into the impacts for the cryptocurrency market and Hedera more specifically, but my gosh, talk about deja vu. It was 10 years ago, or 8 or 10 years ago, but Mt. Gox. Same thing on a smaller scale, right? This is worse and much bigger because the market is bigger, but at the same time, yes, it's very similar. I'm curious as to the entities that have tried to remain as compliant as possible. Hedera being one of those, Coinbase being another one that tries to work inside the guardrails of the existing regulation, even though it doesn't fit perfectly. How are those going to come out on the other side of it? And I would think that they're probably going to end up being better off than a lot of their counterparts.
Right. So yeah, so the kind of the tail end of that, about the chapter 11 was the note that bankruptcy does mean that it could be a long time before individual investors and others owed their funds are able to potentially recover them. And the article that I was reading in the Wall Street Journal said closed the statement with "if ever."
If ever. Yeah.
Yeah. Right.
Yeah. I mean, and you know how bad the Celsius issue was when you looked at their balance sheet compared to FTX. Those people, even though they don't have too much to lean on, are in a much better position to end up getting some kind of payout, get 50 cents on the dollar, 60 cents on the dollar, compared to FTX, which is going to be very close to a total loss, it appears.
Right. Yeah, well, yeah. Last time I looked, and I think it's been at least 48 hours since I looked, but the FTT token, I mean, it lost 90% of its value. It's just basically got vaporized, and I don't know where its ranking is currently, but at least within the case of Luna, I mean, Luna was, Terra Luna and Luna Classic. There were some people that, there's the tribal nature of cryptocurrency. There were people that rallied around it. I have heard people that, have actually, there's a business leader here in Savannah that's said, no, Luna Classic's going to come back. He's interested in being instrumental in bringing that back. And, I mean, so there are diehards, right? There are true believers, right? I mean, I remember when BitConnect blew up back in 2017, 2018, there were still people buying and selling and trading BitConnect, even though it had completely blown up. So, so there'll still be believers out there, but it's a little different with the currency exchange. That's basically like a loyalty point where, like you said, where at least Binance has a layer 1 with the Binance Smart Chain, but the FTX does not have that.
Well, that's a good point, bringing up about Terra Luna. So Terra Luna, this is much closer to BitConnect, right? Ponzi scheme fraud.
Right.
Terra Luna, at least you could take a look at how their algorithm was set up and make that's what the whole thing was based on, and you could make your own assessment based off of what that algorithm had, how they were handling their the risks that they were taking on, how they were handling their assets, all that kind of stuff. Here, you assumed that FTX was holding the deposit sacrosanct, right?
Right.
So yeah, it's a different animal. This is fraud.
It is a different animal.
Yeah. I saw they had the lion's share of their holdings was based on FTT. I mean, it was FTT, $5.8 billion worth of it, and it was literally backed by Hedera.
Yeah. And that was Alameda, right? Not even FTX. FTX should have been 1-to-1 on every asset that somebody held on FTX. It's amazing, and that's what all of these exchanges are trying to do. We talked about proof of reserves in a little bit different capacity, but that's what all of these exchanges are trying to do now, is prove that they have 1-to-1 assets backing whatever their deposits are. And I mean, Coinbase has a lot easier time doing this because, being a public company, they have to go through these rigorous audits anyway. So interesting.
Yeah, it's unfortunate. So, and speaking to the unfortunate aspect of it, and Tim, if you would maybe check in on our YouTube users and see if there's any questions flying in. But some suggestions out there. And again, this is not financial advice. This is not investment advice. This is just people, sharing their opinions for educational and entertainment purposes. But we have a community, and we like to help out where we can. So if you did or do have assets on the FTX exchange, just a couple words here: having a paper trail to indicate what you bought, when you bought it, and how much money you lost will prove incredibly helpful. So, as this proceeds, if you don't pursue it and you don't keep up with the paper trail, then you probably, probably goes to definitely not, almost definitely not going to get anything back if you don't back it up and have some kind of paper trail showing what you had. And so FTX did provide basically like transactional records. So if folks log into the FTX account, assuming that you can get into the website and it's up, which I believe it is, and look for a section on API keys. So this was told me, look for the section on API keys in your profile, click on create read only API key, save the key in a safe place, and then download all the statements indicating your crypto transactions, dates of purchase, the amount of capital gains and losses you incurred or made, of course, because there's tax reporting requirements. Almost in every country has tax reporting requirements on your cryptocurrency gains. So there is an API key associated with your profile. Create it read only, save that key in a safe place, and then download all the statements indicating your crypto transactions, date of purchase, amount of capital gains and losses, and all those things that you incurred while you were using FTX. And then, say a prayer and, and try not to worry about it, because any of this stuff is going to take a while to unfold. So, and my sincere and deepest apologies to anybody that had serious funds locked up in FTX, if you're not able to get them, or if you've been, if you're one of the unfortunates that, and I hate to be one of those, we told you so kind of people, but not your keys, not your crypto.
Yeah.
I know centralized exchanges are wonderful. They seem so good. They seem so easy to use. It's how I can get on and get off and transfer it into USD and all those things. But man, you've just got to be so super careful. And I'm really concerned about the effect this is going to have in the short term on crypto markets, because so many people rely on exchanges, and this is going to scare the heck out of everybody. And you've seen, and we could just kind of dovetail that into, unless you got anything else, we can dovetail that into market news. If you brought some market news for us today, Brandon.
Sure.
And by the way, Jeremy, just a moment. For the general public, it's so difficult to tell, because when you look at these huge exchanges, the founders themselves, you look at them on TV or in social media or whatever place, they are interacting with people that we trust. Of course, if I see you with the president of some country, US or whatever country, or some other big names, of course, there's that level of trust that I put in you. So I wouldn't go. I personally, I wouldn't blame anyone to, like, when they find themselves putting some amount of money on those exchanges. But it's highly discouraged. Just get a hot wallet or a cold wallet, either one of those, and take custody of your holdings.
It's risky. There's no doubt about it. I mean, this is it's a new era. It's a new technology. There are definitely, I mean, it is not necessarily easy. And, and unfortunately people just kind of jump in thinking, oh, well, this is, maybe I can make a quick dollar, make some money, over the weekend or over the next couple of months, things might go up. And that's just, it's a dangerous proposition if you don't do serious research. I mean, even people that have done serious research and, and pay close attention can still fall into little pitfalls. Maybe they created a second wallet, but didn't write down the recovery phrase to that wallet because they thought that the recovery phrase that they had was good for all of their wallets or something. I mean, I've just, as a wallet provider, we have seen so many different scenarios where people thought, well, I thought I only had, I've heard this many times where people said, well, I saved my recovery phrase, right? And then they created other accounts and other wallets that had separate recovery phrases, but they thought that one recovery phrase would restore like the application, right? Like they thought that one recovery phrase would poof magically bring the wallet back to life with all the accounts. But now if the accounts are associated with that recovery phrase, then yes. But if you created multiple wallets with multiple recovery phrases, then that, and private keys, that's not the case. And I have seen that multiple times where people have just misunderstood that aspect of it. And so there is definitely some educational stuff out there that needs to happen, and just be careful. if if you're not sure, don't put your life, don't take a 401k and put it into a crypto wallet. I mean, unless you are just absolutely, if you're a tech whiz, or if you're just that, willing to take the risk on, but again, just be careful with your crypto. That's about all I can say is do your own research. It's not easy. If you're not a techie, there's been people that I've told that, hey, you really don't have any business in being, you don't really have any business being in this environment currently.
Yes.
Not yet. We're getting there. We're working hard to build, to build the infrastructure and build it and make it just as easy as, one button, simple kind of stuff, but we're just not there yet. So just be careful out there, because I think all three of us have seen people lose significant amounts of value.
Trying to manage their own keys, right?
Yeah.
And that's what I was saying that for a while, that I had known a lot more people in the Hedera, and I mean, FTX doesn't affect Hedera because they didn't list HBAR, which was, a small silver lining. But, I had been able to say for a long time that I had known more people to lose trying to manage their own keys rather than on centralized exchanges. I can't say that anymore. After a blow up like this, with how trusted FTX was by so many people, you really can't say that. And I'll definitely go back on what I've said in the past, and yeah, you have to, not your keys, not your coin.
Yeah, it's unfortunate, and I hate that, because I love how easy it is to use the centralized exchanges. I mean, they're great, and a lot of people just, hey, I trust the, I've heard that so many times. I trust the exchange with my keys more than I trust myself with the keys, so I'm going to keep it on the exchange, right? Well, but there's no FDIC, right? This isn't like the normal banking world where you keep it in you keep it in a bank, and the Federal Deposit Insurance Corporation is going to step in, like the tooth fairy, and grant all your, fairy godmother, and grant all your wishes and give you your money back. It doesn't work like that, as we can see with FTX. I mean, I just feel that it makes me a little sick to my stomach thinking about people that that have lost. Unfortunately, that there's people out there that have lost their shirts in this. So sure. My heart goes out to them and their families. But anyway, so what effect has this had on the markets in general, Brandon? What market news can you share with us today?
Sure. Well, I can certainly talk to that a little bit. Again, not financial advice. We're just kind of going over what's going on in the markets. But the one silver lining to this is right around the same time all this stuff was happening, we got some positive macroeconomic information. So the inflation in the United States ticked down a little bit to 7.7%. That might mean that the Fed might not need to raise interest rates as aggressively. So all the risk assets did really well, except for crypto, of course, toward the end of last week. So stocks went up a blistering pace. So that kind of helped us out a little bit, I think.
Sure.
So Bitcoin is down 21% over the past 7 days, hit, of course, by all this. Ethereum's kind of in the same boat, and over the past 24 hours are pretty much flat. HBAR has actually, and Hedera, HBAR has held up pretty darn well. So over the past 7 days, it's down 24%. So similar to what we saw with Bitcoin and Ethereum. A lot of the other it's down 21%. So exactly the same as those large cap cryptocurrencies. And it's pretty much flat over the past 24 hours. Most other altcoins have gotten hit much harder. I mean, some of them have been horribly hit. Things like Solana, and of course we talked about FTT, but a lot of them have been hit a lot harder. Solana was wrapped up as far as VC money and all that kind of stuff with FTX, so that's why they're getting hit so hard. They're down 60%. So that's generally what we're looking at. HBAR, I saw some compression right around that, 4.3 to 4.5 cents. And when I talk about compression, it looked like it was falling faster, and then all of a sudden it started to outperform some other tokens. And outperform, I don't mean going up. I'm saying not falling as fast. That kind of tells me possibly that there's some buyers in that 4.3, 4 to 4.5 cent range in there. So that's certainly positive to see. Now, we've been talking from the macroeconomic standpoint because the Fed has been so aggressive with raising rates, and because inflation has been pretty darn sticky, that we were going to see a rough time. And of course, the cyclical nature of the 4-year cycle with cryptocurrency. Started talking about it on here, I believe. What was it, about 9 months ago, 9 months ago, we started talking about how the next 12 to 18 months, we're going to see some good opportunities, meaning the prices were going to come down significantly. So this is just another headwind for the cryptocurrency market. So, if you were betting on certain prices getting hit, you can probably chop, another 30% off those prices, maybe even more, and we might get down to those prices. But this is potential opportunity. The last time we were down around these prices, we're talking about HBAR in particular. Think about where we are. So the very beginning of 2021, the very end of 2020, where we were as a network, as an ecosystem, right? And the value that we had in the ecosystem at that time. And think about how much we've progressed since then. And of course, the difference, and this is for me, I always look at it as the difference between the price and the value. That's where the opportunity is. Right. So, and if the value of the network has grown significantly in that time, whether it's DeFi, NFTs, everything that's being built by the council members, and so on and so forth, if that has gone up and the price has gone down, the opportunity has become greater, in my opinion, for me. That's how I look at it.
Right.
Now, going back to some of the FTX stuff, you have to look at DeFi and say, this could be part of the solution, right? So you take it out of the control of centralized entities. Not to say there isn't risk in DeFi, there certainly is, but you put it into the smart contracts, you put it into the smart nodes for some other platforms that are thinking about being built on Hedera, and you take it out of the control of the centralized, possibly nefarious players. So I think one of the winners that could come out of this is DeFi. Now, right now, it's kind of in a proof of concept phase. Hedera is doing a fantastic job. I know SaucerSwap put out a clip recently showing how fast their transactions go through compared to a lot of other networks. You also have to think about how there's no mempool, right? So it's more fair. That's something that, of course, Lehman and the Hedera team has preach from day one. And that's so much more important when it comes to Hedera. So I think DeFi could potentially be a winner in the future, eventually, with firms like Aberdeen tokenizing their assets. We could potentially not only get rid of fraud and some of the issues in the cryptocurrency space, but the traditional finance space as well. Because, of course, we've had all kinds of fraud there with Bernie Madoff and Enron and WorldCom. I mean, we've had plenty of fraud there as well. If we can add the trust layer of the internet to it, we might be able to do better. And going back to just generally Hedera, they've tried to do things by the book. Right. And we talked about this before. So I think that maybe not right now, we're going to see the benefits of that. But in the months and years to come, I think we will start to see the benefits of that, that it is run by people with the highest level of integrity, in my opinion. So,
absolutely. Yeah. And that's one of the things that Gary Gensler said, the chair of the SEC here in the United States. And he's been in regulatory, a part of regulatory bodies in the United States for a long time. And when he took over, a lot of people are like, "Oh, wow, this is going to be bad." But basically, if you watch what he said in the Senate hearings that he's been a part of, he just said, "Look, come into the regulatory bodies. We've got open arms. Just come in. Bring your complaints, bring your needs." And we're willing to work with companies,
Mhm.
right? And I do think that there is that sense. I mean, Gensler taught at MIT for a long. I mean, he's not an enemy of technologists. He's not an enemy of innovation. I do think that he's, of course, there's things like taxes that that people critique them for wanting to get their hands on the taxes and stuff. But but that's regulators and governments. They're in the business of taxing and regulating, so that's what they're going to do. But I think when you see platforms and companies, networks like Hedera that, like you say, have kind of gone to the regulators, gone into the open arms and said, "Look, the book hasn't been written yet, so how do we go by the book when the book hasn't been written?"
Well, that's one of
that will pay dividends down the road. I agree.
That's one of the issues is the square peg round hole kind of thing, right? So they're trying to fit this into, is it a security? Is it a commodity? Is it a currency? And it should fall more into a currency in a lot of ways, but it's something new, right? So you have to create new regulation. You can't tweak the old regulations for securities and things like that.
Right.
HBAR should be able to be used as a medium of exchange, right? And there's all kinds of reasons why it just doesn't work as a security. Is it a commodity? That really doesn't seem like it fits either.
Right.
You could say it's a currency, and I think it should be. A lot of these cryptocurrencies should be used as a currency in a lot of iterations, but it doesn't fit just there either, right?
No, because it's network fuel. I mean, how do you
Of course.
how do you regulate network fuel? I mean, just the concept itself is totally new. So yeah, so
Yes.
they're going to have to kind of they're going to have to kind of wipe the slate clean and start, and
New
I don't know
regulation.
if they will, certainly we certainly hope that they will, but the tendency is to just kind of try and take, old legislation from back when,
That's lazy, right? I'm sorry.
right.
I mean, I'm just going to say that's just straight up lazy. You need to get to work, talk to the experts, get with people like Mance and Lehman and Brian Armstrong and the good actors in the space, and figure out what makes sense.
Right. Yeah, it's crazy when they try and bring up regulation that was like, designed when the trains were new, right? Like, I mean, like trains and, things were still shipped in wooden boxes. And
Sure.
I mean, it's like we live in a different world.
Certainly maximize innovation and safety, right? You want to have as much innovation as possible to bring as much prosperity to as many people around the world as possible. At the same time, you want to be safe, but not to the point where it stifles innovation too much, because you will eclipse, if you allow this technology to run, the amount of value that you could potentially create for people around the world will eclipse a few little bumps in the road if you have some issues. And of course, people are going to try to take advantage. There's going to be fraud. Of course, criminals are usually the ones to use new technology first, whether it's the automobile or automatic weapons or whatever it is. They're often going to try to figure out ways to use it first, but that doesn't mean you throw it out, because it can be a huge benefit to society in general.
Right.
There's something you mentioned a while back that has really made me happy. It resonates with me. That we don't have to measure. There's some metrics. There's some metrics of value you don't measure with, like price. Like if you compare where we've come from, where when it comes to the growth of Hedera, there's that value realized that is there, and you can't measure that with the price. So even if it's not moving, or it's tanking a little bit, we are happy. We're all happy because there's some value that is there, and it's ever increasing with time.
Yeah,
there's no question about that. A couple of things that we haven't even talked about is, Realm with their EA Sports, so gaming, entertainment. There's all kinds of things being built there. Just last week, we had that huge test done. And that's done by a real world use case that tripled the previous record as far as transactions in a day for Hedera. We were doing, in 10 hours, we did about 24 million transactions. And don't know when that's actually going to go live, but I did hear that that's a real value add use case being used in our space. So, that stuff is coming, and it's going to, again, add value to things outside the cryptocurrency space. It's not just trading ones and zeros back and forth. It's adding value elsewhere.
Right.
Yeah,
right.
Exactly.
And we'll get into some more of the great stuff. That's some of the great and good news and positive news next week and in the preceding weeks. Of course, we're back every week, and we'll talk more about that. We're going to go ahead and start to wrap it up. So for the folks that are still out there in our YouTube audience, the magic number for today is 11, like as in Chapter 11 bankruptcy protection. So the magic number is 11. If you email us at info@wallawallet.com, you can put 11 in the subject or in the body of the email, and we'll know that you're, we'll know that you're out there. And so get those emails flying into info@wallawallet.com for your 25. The first one that flies in with the magic number 11 will win $25 in HBAR. And for our jam token winner this week, let's see, we have got at Artha S_XRP. So an XRP fan out there, Artha S_XRP is our 10,000 jam token winner for the week. And just a little bit of Walla Wallet news. I'd be remiss if I didn't mention any Walla Wallet news. Of course, Walla Wallet version 2.0 is out there in the wild. We've got some exciting announcements coming up regarding that. Back at Hedera Ween with King Solomon and that little giveaway there, we gave out some of our MDOG Super Metadog tokens. So Rob and I have created this. We were just kind of goofing around and having fun. But we created these MDOG NFTs to really kind of just show off some of the new cool things that you can do with NFTs on Walla Wallet. So just with Walla Wallet, you can, I mean, we've got support for multimedia files, we got support for file nesting, there's all these traits, there's all kinds of super cool. I saw one of our close associates. If you actually work for Walla Wallet, it doesn't count. You don't get the $25. So I just saw some emails flying in from somebody that works with us. At any rate, but yeah, so a lot of exciting stuff coming down the line with Walla Wallet. And so there was 142 of these MDOG tokens created. That represents the maximum occupancy of our VIP room. So Walla Wallet VIPs are receiving these MDOG tokens, and we'll start in the coming weeks. We're going to talk more about the benefits that that possessing these MDOG tokens is going to get you. Like I said, if you look at the MDOG token itself, is just kind of silly and goofy. Rob and I made it kind of off the cuff, but it does show off a lot of the cool things that you can do. Embedded videos, multimedia files. I mean, there's so many cool things you can do with NFTs. This, in my mind, is the evolution of NFTs, and particularly the NFTs on Hedera, which in my mind, I don't think anybody else is doing it like Hedera can do it, and nobody else does NFTs like Walla Wallet does. And we're working on it all the time. We're improving our staking features. So keep your eyes and ears tuned for some changes, some really nice changes coming to the staking feature within Walla Wallet. 6.5%. I mean, who else is that? You know, I mean, now sure, there's some, you know, you might see some higher APYs with some of these other platforms, but 6.5% stably, securely, safely on Walla Wallet. I mean, I can't talk enough about that.
Yeah.
I've got people that have never been interested in cryptocurrency. I mentioned 6.5%. They're going, wait, what? 6.5%? I can't get that anywhere. So a lot of people getting excited about the staking. So, you know, stay tuned. Lots of good stuff coming down the line.
I do have one other thing. We did,
yes.
My channel actually just passed 10,000 subscribers on YouTube. So yeah. I was psyched about that. We did some great giveaways. You were speaking of giveaways. We gave away some Earthlings token. We actually gave away the first 1 center. So I don't know, actually. And I sent it out. We had some physical tokens made, all that kind of stuff. Sent it out to Sweden. That's where the winner was.
Wow.
But we sent in this cool little package, all that kind of stuff. So yeah, it was fun.
It's fantastic looking.
So is that gold plated?
It's copper. It's copper because it's the 1 center, right? So the pennies in the U.S. are copper. So I don't know. Well, maybe we'll have before the end of this whole mess. Maybe we'll have some more real 1 centers out there that purchase HBAR at a penny. I don't know. We're not gonna, if it is, it's a great opportunity, and I'll be right next to you. But I don't know if we'll get down there. But yep,
right. We'll see. Awesome. Well, I want to thank everybody for joining us. It's been a fun show. Despite all the drama in the cryptocurrency space, you know, we're just bringing it to you live and raw here on the Alternative Money Mondays live stream. Of course, again, I'm Jeremy Fletcher, co-founder of Ledgerama, the builders of Walla Wallet, the original, the safest, the trusted mobile wallet in the Hedera ecosystem. Our community manager, Tim Mungai, and my favorite influencer in the Hedera ecosystem, bar none, Brandon the HBAR Bull. Thanks for joining us. And again, we've got I see some of the HBAR winners flying in. We've got our Jam token winner that will be reaching out to Twitter. We'll be reaching out to via Twitter. Thanks everybody for being here. It's been a great week, and we will see you next Monday. All right.